I'm the First Year Experience Program Facilitator here at ECTC. And joining with me today, I have Miss Hollie Sexton, who is our financial education professional with Abound Credit Union. Many of you all may recognize her name as the radio personality formerly with Quixie. So Hollie has a great personality and leadership style to be facilitating some of these workshops today geared towards financial education. So welcome, students. We're very excited that you're joining us today for this workshop. We know many of you all are struggling to make ends meet, especially during the middle of a pandemic where work has been a little bit challenging and everyone's making money stretch. So Hollie is here with us today to basically give you all just some tips and tricks of things that can just help you all live a healthier life in terms of your finances. So I'm going to hand it off to Hollie, and she is going to take it from here.
Thanks, Amber. What a great introduction. I appreciate that. And thank you, everybody, for joining today. We'll be on for about 30 to 45 minutes. And if you can't stick around the whole time, that's okay. You can watch this later. It is being recorded to post on Blackboard and YouTube. But we'll hope you hang out with us. As Amber said, my name is Hollie Sexton, and I develop, outreach, coordinate, and present financial education for Abound Credit Union. And I'm happy to have time with you today to talk about the basics of financial education. There'll be the opportunity for you to attend 3 workshops this month, and I hope you do that because today is the basics, and we are going to go deep the next couple of weeks. And we'll talk about how the basics can empower you and change your life. So please grab a pen and paper because you'll get out of this presentation what you put into it. So pen and paper so you can take some notes. And I highly encourage you to use the chat feature to interact. Amber Hubry will moderate and she'll take your questions. She'll also interact during the presentation and let me know what you're posting in the chat. And interacting will also qualify you for some fabulous prizes. We have Abound swag, we have ECTC swag, there's a Starbucks gift card in there and more. So Amber will be contacting the winners this week, so participate and good luck. All right, let's get started. I'm going to share my screen. And you should see Together Creating Possibilities. Amber, can you see that?
I can. You're in good shape.
All right, sweet. We'll get started. And that's what we talk about at Abound, not just in financial education, but full circle, Together Creating Possibilities. And you can visit us online as well. I highly recommend it. aboundcu.com and click the Learn tab. And if you devote just 5 minutes a week, I said 5 minutes a week, that's it, 5 minutes a week to learning, you will improve your life tremendously when it comes to your finances. And as we know, that spills over into all areas of our life. So aboundcu.com and click the Learn tab when you get there. All right, so basics. Really, we're setting line on line, precept on precept this month. So this is where we're starting, and we'll move in a little bit deeper next week and then so on. So what is a credit union? Well, credit unions do not have customers or clients. Credit unions have member owners. So it's a big distinction between a credit union and a bank. So everyone who joins a credit union has a share account. And in the share account is $5. That's what's required to open a membership account with a credit union. Now, amounts do vary to become a member of a credit union, but the $5 in your share account stays there, and you are a shareholder and a part owner. So that's the big difference between a credit union and a bank. Now we're talking Adulting 101 with your finances, so that includes budgeting. So income and expenses. Income is what you have coming in, and expenses are what you have going out. So use the chat feature to interact with Amber about what income you may have coming in. For instance, wages and tips, benefits and assistance, interest and dividends. You may be receiving financial aid. And I hope you filled out your FAFSA already. So those are some of the things that may be coming into you as income. Some of the things that may be going out are housing, like your rent or your mortgage, your utilities, groceries, cell phone, that type of thing. So Amber, do you have anything to share?
I love that you mentioned the importance of filling out their FAFSA because from our end, that is so important right now. Students oftentimes think that it's really not very important or that they don't have to do that, but be sure that you get that taken care of. I recommend by the end of the month. That way it's just resolved and out of the way. As far as budgeting is concerned, I love that you have just the income versus expenses, because oftentimes I think a lot of individuals have no idea the impact that expenses have as compared to their income. They just look at the income and think that's a great deal of money. And then by the time you factor in all of your expenses, there's not much left a lot of the time for most people. So I think comparing and contrasting both of these is really good.
Agreed. And thank you for your input on that. And really, when we talk about the basics and Adulting 101, we're just helping people be cognizant about income and expenses and budgeting. So what you're actually doing with the money that you're bringing in. All right, determine income and expenses. Again, this goes along with the basics of budgeting. So let's talk about wants and needs. A need is something that is necessary for basic living, like groceries. A want is something that makes life more comfortable or enjoyable, like a $500 a month car payment. Or I'm trying to think of another want. My son, he's 11 years old, and he wants a gigantic rig or a computer. So those are some things that are wants. Now, gross income, total income before taxes or deductions are taken out. So if you land a job and you're like, this is fantastic, I'm bringing in this much money a month, or this is my income for the year, well, that's your gross income. Your net income is what you actually bring home after taxes and other deductions are taken out. And this is the money that you're going to use for your budget. So you're not going to say, I make $25,000 a year and that's what I'm bringing home. No, actually, what you're going to base your budget on, again, is that net income, which is what you bring home after taxes and deductions are taken out. And then there's my favorite of all. It's discretionary income. Yay for discretionary income. This is money left over after all your bills and obligations have been paid, and it's what you use to achieve your financial goals. And really, that's where the power part comes in. This is where you can really take control of that discretionary income and do some fun, exciting long-term goal things with. All right, so this is my spending diary. And we're going to look at needs and wants. So for the spending diary at Starbucks May 1st, I went there, I used my credit card, and I paid $8. Need or want? Well, we know Starbucks is a want. Some people wake up in the morning, especially in the fall, and they need that pumpkin spice latte, and they think, I have to have it. Well, that's a sometimes treat. That's a want. I picked up gas at Kroger. Had to have fuel May 3rd. I used my debit card. That was a need because I need to have transportation. Next up, Subway. I used my credit card. That was a want. But you may say, hold up here, I need to eat. So I could see Starbucks maybe and paying $8 for that unicorn latte or the pumpkin spice latte. But Subway, that's food. That should be a need, right? Well, let's talk about this for a minute. So Amber, are you getting any responses? Would anybody like to share why they think that that's a want rather than a need?
I was actually looking at the chat. I'm getting some messages where students were finding difficulty typing in questions. So I'm answering some of those. But I think as far as the want versus the need, even just like you're saying, as far as food is concerned, it's easy for us to justify and say, well, I have to eat. Cracker Barrel sounded good or Subway sounded good, so I went there. When in reality, we can spend a huge amount of money each month eating out as compared to just buying groceries and packing our lunch or packing our breakfast every day. So I think that's important to look at, because as much as we can just justify it in that category of food, this is a need. We don't have to necessarily spend more money eating out every day.
Fantastic. Yeah, you're absolutely right. Packing our lunch and preparing is going to save us thousands of dollars. So be mindful of that. So I just wanted to share an example of my spending diary here. And one more thing, car payment. I need transportation. So, and I said, I need transportation, and that's true. So that's my need. A big part of budgeting is finding ways to eliminate budget busters. And that could be, as Amber mentioned, going to eat out all the time, or excess ATM fees, or unhealthy habits. And that money can go to our other financial goals and savings. We also need to be aware of lifestyle creep. So as we earn more income, our goal is not to increase our standard of living, but in fact, to budget more of that money toward savings. So there's a way to do that. We have the 50-30-20 rule. And the recommendation is that 50% of your income should be for needs, 30% for wants, and 20% for savings. So please write that down, 50-30-20. Again, the recommendation is 50% of your income should be for needs, 30% for wants, 20% for savings. And if you need help figuring that out, if you go to aboundcu.com, there are plenty of calculators on there to help you do the work. One of the things that we offer that can help prevent lifestyle creep are checking and savings accounts. The reason I say that is because you don't want to pay monthly maintenance fees for accessing or handling your money. So we offer checking and savings accounts that have no monthly maintenance fee. Also, the opportunity to get paid early, up to 2 days early, if you have direct deposit and your employer supports that. All right, I feel like I'm going old school with this because some people have never seen a check before. I don't really use checks anymore. I may use a couple a year, but these are the basics. So we want to make sure that we cover check writing. Some people I know, they use checks to pay their bills every single month, and that's great too. So a check includes your name, your address, the name of the financial institution. You'll also have a check number for tracking. And when you write the check, you'll need to put the date, who you're paying, write the amount, $14.52, so $14.52 numerically. And then you also need to write it out. So 14 and 52 over 100, and then make your line after all the way to where it says dollars. And this is to prevent fraud. You don't want anybody to have room to write anything else in there. This is a lifesaver for tracking, which is your memo line. So we know that you paid John Smith $14.52, paying him back for lunch, and then signed right here. And then every check has numbers on the bottom. The far left will be the routing number, which identifies the financial institution. The middle will be the account number, which is your account number. And again, here at the bottom to identify what check number. So what are some advantages and disadvantages of using checks? Feel free to comment if you can. Amber, how's that going? Are people able to participate?
Actually, yes, I have a student that has just sent a message. She said, whenever Ms. Sexton has time for questions, I'm curious why she uses her credit card for all of her wants instead of her debit card from the example chart. So I know this is kind of stemming off of the checks for a moment. But do you have a reason for using a credit card as compared to a debit card? I know I do, but many students have asked that.
I do, and that is a great question, and I will get there in just a minute. So let me wrap up checks really quick. As far as checks go, there are advantages and disadvantages. Some people feel the checks are more secure, and others don't pay with checks because it may delay the time in which it clears your account. But either way, that is an option for payment. All right, here's a check register, and that's always a good idea to keep. I called mine a spending diary. You can call it whatever you like. You can keep it on old school. You can do paper, pencil. You can use an actual check register that your financial institution gives to you. You can use a fun diary if you want. You can do whatever you want that works for you. Some people use the app completely, and that's fine as well, just to be able to track. And what's so important about this is not only are you working on your savings goals, but in addition, being mindful of this, whether you check it daily, weekly, or monthly, which I highly recommend at least weekly, that it makes you more cognizant of your spending. So if I know I dropped $30 at Target and I see my balance here and it's not where I want to be, or I'm not exactly on target with my savings goals, it may make me stop. It may make me pause and make better decisions when I'm out with friends, or when I'm tempted to do some online shopping. If I see week to week or even day to day what I'm spending by using a register or using an app, I'm going to make better choices. All right, so let's talk about a savings account. Savings account, let's break it down into money market and share certificates. So a savings account is where you put your money, again, for goals, but also it compounds with interest over time. Not a lot of interest, but a little bit of interest. And the financial institutions pay interest on money that's deposited into your savings account, which is different from your checking account. Then we have a money market account, and that's a savings account with check writing capabilities. There are some limits to this and some restrictions. For instance, and this is just hypothetical, say if you want to write 5 checks out of that account a month, but they only allow 3. So just be mindful of that. There's also share certificates, and this is a smart thing to do with your money if you don't need to hold on to it. It's a deposit to be held for a specific period of time that you get a much better rate of that compounding interest over time. So 6 months, 9 months, 1 year, the financial institution pays interest to you on the deposit during that time. A little bit about auto loans. Whenever we do a presentation, it always comes up. People ask about auto loans. Abound does offer affordable payment options and competitive rates on auto loans, and highly recommend before buying that you use NADA.com. So write that down, NADA.com, if you're shopping for a vehicle. And the great thing about a credit union and finding a lower interest rate is that you are going to save thousands of dollars and you're going to lower your monthly payment. So if you have a high interest rate, if you've already done that, you've already purchased a vehicle and you have a high interest rate, you're going to work on improving your credit and the basics to get in good shape so you can refinance at a lower rate. And again, that's going to save you thousands of dollars. Or you get yourself in good shape financially with your credit score, et cetera, and then you can go in and get a lower rate from the beginning, which we highly recommend. We also offer dealer direct financing. So if you wanted to become a member, you could even go through one of our local dealers. You can find out more information about that at aboundcu.com by clicking auto loans. And in addition, we offer extended warranty and gap coverage. Now, Amber, to the viewer who mentioned talking about debit versus credit, we're almost there. So hang tight, hang with me. One more benefit I want to talk to you. Thank you for being patient. One thing I wanted to talk about too is a benefit of being a credit union member is skip a payment. Yeah, it's for real, skip a pay. So if you need a break, you can take one, take a month off from paying on your loan. So typically, Abound members can choose to take a break 1 month in the summer and 1 month in the winter. And what that does is it helps, say for instance, if you want to take a vacation or you need a little breather, or you could take those funds and pay off a high interest credit card. It's also great around the holidays too. I like skip a pay on my auto loan, and I use it around Christmas time, around the holidays, so I can buy presents and make the holidays even more special for my kids. All right, your patience has been rewarded. Debit versus credit. Okay.
Oh, Hollie, quick question actually from a student on the skip a payment. Yeah. When you do a skip a payment, does it put the payment on the back of the loan? Is the question I got from a student.
Yes, and there is it's a fee, but it's not really a fee that you pay. I think it's $35. I have a skip a pay buck slip around here somewhere. But anyway, yes, and there's no penalty there. So if your account is in good standing, you can find out more about skip a payment at aboundcu.com. Good question. Thank you.
Thank you.
All right, debit versus credit. What's the difference? And we had a fantastic question about that. So Amber, do you have that question handy? Can you ask that again?
Sure. So the student was curious why you would pay for your wants/needs with a credit card as compared to a debit card, or instead.
Good question. Yeah, that's a fantastic question. And thank you so much for interacting. I appreciate that. Some credit cards, not all, but some credit cards offer cash back. And you can get cash back on fuel and groceries and all sorts of purchases, Amazon, that type of thing. So if I'm in good shape and I know that I haven't like really worn my credit card out, like I pay it off every month and I'm really responsible with it, it behooves me and pays me back if I use it for those everyday purchases. So that's something to consider. It's sort of like if you're I'll just use the example. We're not affiliated with Kroger, but say Kroger Plus, and you get fuel points, that type of thing. If you equate it to that, but it actually puts money back into your account. And the other benefit is that it can help build credit. And a debit card, as you see, our really cool debit card over here. What I love about our debit card is not only does it look super cool when I pull it out to use it, people are like, wow, what is that? The other thing about it is I use the app to track all of my purchases. So that really helps me to keep track of where I am and help me be super cognizant of how I'm spending. Great questions on debit versus credit. And speaking of credit, we're going to talk about credit and credit score. When I first learned about credit score components, I was really shocked. And I'd love for you to look at the components and message Amber and let her know what you think the most surprising or the most interesting component is. We know a large part of a credit score is based on payment history. Are you paying your bills on time? Also, how much credit are you using? How much you owe versus your credit limit. So for instance, if your credit limit is $800 and you owe $650, you have a high utilization of available credit. Also, types of credit. Do you have a variety? Like credit cards, loan, mortgage, student loan. Student loan is in there as well. We don't think of student loans often as impacting our credit score, but it does. Also, new credit. Have you applied for any new lines of credit? And this is super, super important. So when you go into a boutique, you go into a store and they're like, hey, you'll save $15 today if you sign up for our store card. And then like, you can just pay it off and not spend or use it ever again. And you're tempted because you want to save that $15. Well, what happens is you've opened that new line of credit and it just sits there. And no matter what you decide to do, even if you give in to the temptation of using that credit card, which most of us do, even after we've had the $15 savings, you still have that open line of credit. Also, length of history, how long you've been using credit. So Amber, do you have anything to share with that?
Yes, I'm glad you have included the length of history because I've even had younger family members talk about, well, I pay all of my bills, I pay all of them online. I don't understand how come my credit score isn't higher. And it's because they are so young and are kind of getting their feet underneath them, so to speak, financially, and that they simply don't have, 20 years of credit built up. They have maybe a year and a half. So I think that's something that's important for people to remember and keep in mind, especially whenever you're younger. I think a lot of students just don't realize that.
Agreed, 100%. That's such a good point. Next up is what the credit bureau looks at. So, well, the components for what the credit bureau looks at and what financial institutions look at for lending, this and other things too. So credit bureau scoring range. Now, when we talk about credit score, and I know there's so many ways to obtain your credit score, but you can get a free credit score once a year. And there are very reputable sites to do that. And I'll be happy to look that up and share with Amber so she can post in the thread. So credit bureau scoring range starts around the 400s. And Amber, here's something to mention, and we didn't create the language. This is actually the language created by the credit bureau. So we don't think someone is very poor because they're a 450. It's just that's the language that the credit bureau lists. But for instance, for someone who doesn't have very much credit, but they're just getting started, they may have positive experiences, but they may just not have a long history or much or no credit at all. But we're looking up here to the 810, which is exceptional, which is what we're working toward. So even if you have little to no credit and you're around 450, it doesn't mean that you're poor at managing. It's just that there's just not much history there, not much to reflect or look upon when it comes to deciding if a person is if they'll be high risk or if they'll be a good choice for loaning to. Also, I think it's important to remember that when we're all getting started, or say for instance you just came into school and they've sent you, all these companies have sent you credit card offers, if you've taken one or two of those, that's okay. You can still make good choices with those. You absolutely have time to try and work and get to that exceptional. And it is work. It's, as I mentioned, it's paying your bills on time. It's also having a variety of credit, and it's keeping those new credit applications down. Don't take out a credit card or any sort of credit or line of credit unless you need it or you have a specific plan for paying it back. Also, maxing out your credit can really hurt your credit score. And again, that length of history, again, that takes time. So just be patient with yourself there with the goal of reaching the 800s. If you need more help, I use the budgeting tools. They help me a lot in the calculators at aboundcu.com. So please take a note there, aboundcu.com, and check out the calculators and the budgeting tools. And we hope that if you have questions that are not answered today or this month in our series, that you'll come visit us at one of our branches. And if you would take this time, viewers, and message and let Amber know what city you live in. I live in Elizabethtown. So when I first became a credit union member, Dixie Branch was my branch. And let's see, if you're in Shepherdsville, there's the Walmart branch there. We're in Campbellsville, Danville, Bowling Green, Brandenburg, Bardstown, Glasgow, Hodgenville, Litchfield, Radcliffe, Fort Knox. We're all over. This is what our branches look like. So if you see the Abound sign, stop in and say hello to us. And again, my name is Hollie Sexton, and you can email me for one-on-one. If there's something that you want to know, you want to expand your knowledge, or you want a one-on-one, feel free to email me, hmsexton@aboundcu.com. And if you'd like to become a member for $5, tell them you heard about Abound through the Financial Education Program. And like I said, this is just the start, Adulting 101, Managing Your Money, and we'll take a Q&A in just a moment. But I hope that you join Chuck Eads Tuesday, October 20th at 11:30, and he'll spend about half hour, 45 minutes with you talking about credit and lending. And he'll get really deep with that, and he's great at answering questions. And then we'll have Mark Philpott on Tuesday, October 27th at 11:30, and he'll talk about investing. And he is just a fantastic, interactive, energetic presenter, a funny guy, and he also makes learning about investing fun.